Welcome back to the channel. In this video, I'll be going over 3 points. The first is Naspers' initial investment into Tencent. The second is how Naspers spun off Prosus to try to increase returns to shareholders. The third is Naspers or Prosus a better opportunity? Naspers is a company that is over 100 years old, started back in 1915. Before being the massive technology venture capital firm that we know now, Naspers was in the newspaper publishing business. The person responsible for transforming the company is Koos Bekker. Bekker was the CEO when Naspers took the decision to buy 46.5% of Tencent in 2001. The ownership stake was diluted when Tencent decided to IPO. The total cost basis of that Tencent investment was $32 million back then, and that investment has turned into over $200 billion today, as Tencent has become one of the most dominant internet giants, not only in China, but globally. That is more than a 6,000 bagger with a CAGR of approximately 55%, which is insane. As a result of this investment, Naspers' market cap has grown to the point of dominating the South African Stock Exchange. Even today, Naspers accounts for 22% of the South African index. But that is a problem since many institutional investors in South Africa are forced to sell out of their Naspers investment to reduce the concentration risk in their portfolio. The sustained selling of the stock along with the limited float resulted in a downward pressure on the market cap of Naspers, causing them to trade at a significant discount. At least that is what management claims. The company trades on the Johannesburg Stock Exchange at a discount to only their Tencent investment. There is absolutely no consideration for all the other investments that they have made over the past few years, and also for their core businesses. In order to address this discount to NAV, the management of Naspers decided to organize a spin-off in the form of Prosus. In September of 2019, Naspers decided to list Prosus on the Amsterdam Euronext Stock Exchange. The formation of Prosus would give the company more liquidity from a new, diverse base of investors. The new listing of Prosus would reduce the problem that Naspers had, where they were dominating the entire South African index. The Prosus spin-off would be allocated the entire Tencent stake and other investments that Naspers previously controlled. The Prosus IPO on the Euronext exchange was a massive success. Euronext had given an indicative price of 58.7 euros per share of Prosus, implying a market value of 95.3 billion euros. When Prosus was listed on the Euronext exchange, the stock immediately soared 30% from a reference price of 58.7 euros to a high of 76 euros on its first trading day. Now, although that is a great initial listing increase, Prosus today is still trading around the same price despite an increase in the underlying value of its Tencent investment. Although the discount to NAV, which comprises mainly of the Tencent investment, is lower than what it was when the stake was with Naspers, Prosus still trades at more than a 20% discount to the value of that Tencent investment. In order to reduce its discount to NAV, the company has announced a very complex share swap and share buyback program. So eventually, as investors, the question that we have is, what's a better investment, Prosus or Naspers? That question of better investment, it really depends on what you are looking for from the investment itself. Are you looking at both these companies as a way to buy into Tencent? Or is your investment thesis centered around a hope that the management will be able to find the next Tencent? The way that I view both these companies is kind of like a glass box with $100 inside. And someone is trying to sell you this glass box for $80. But the one condition is that the glass is unbreakable. So you can never truly access the $100 that are inside. In my opinion, it is highly improbable that management will ever sell the Tencent stake. They have been aggressively trying to diversify away by selling a portion of the Tencent stake and investing that into other opportunities. Some would argue that management has actually destroyed value by doing that, since they would have had a better return if they just kept the existing Tencent investment as compared to investing it in the other opportunities that they have gotten into. Also, with this investment, you have Prosus and Naspers management to pay for holding that Tencent investment. As a shareholder, you need to ask yourself if it's actually worth paying that extra custodian fee in the form of, say, management salaries and remuneration, just to have access to that underlying Tencent asset. But if your objective is not entirely based on the Tencent asset that they control, if you are interested in the future investments that either of these companies have made in the past and could benefit from, then I would say that look at the actions of management to see which company they clearly prefer. In the recent share swap agreement, this is the deal that's offered. This graph is directly from the investor presentation. Currently, Naspers owns 73% of Prosus. Through a tender offer, Naspers shareholders will have the opportunity to switch part of their existing holdings into Prosus shares. Those that hold on to their Naspers shares will now own 40.3% of a much larger Prosus instead of the previous 73.2% of a smaller Prosus. By buying the Naspers shares, which are more undervalued than the Prosus shares, since Naspers trades at a discount to their value, the stake that they have in Prosus, which itself trades at a discount to the Tencent investment, management is making the claim that they're actually adding value by buying the even cheaper Naspers shares. To me, it seems like that they're taking advantage of Naspers shareholders. What we're seeing in South Africa is that the South African institutional investors are revolting against this particular share swap agreement. A group of 36 institutional managers have come together last month to protest this action by the company. They highlight that the share swap ratio adversely impacts Naspers shareholders and also increases opacity with respect to governance. Clearly, from the actions of management, they favor Prosus between the two companies, even though they maintain that they are very much committed to Naspers. The investments made by Prosus definitely have the potential to be future multi-billion-dollar companies. Here are some of the companies that Prosus is currently invested in. You may even recognize some of these companies such as Delivery Hero, Swiggy, OLX, Udemy, to name a few. Even if you assume that none of these investments do exceptionally well, and only the Tencent investment is held, Tencent by itself could very likely continue to have a stronger rate of growth as the Chinese economy grows. Even if Prosus continues to trade at a discount to their Tencent investment 5 years later, it would still likely do well, since Tencent is likely to do well. Of course, I do have my reservations about management, but I cannot help but be impressed by their current investment portfolio. It does seem like they have destroyed value in the short term, but that is because they are run more like a venture capital firm. Saying that, you do have a margin of safety with the Tencent investment and all the other investments that they currently hold in their portfolio. I am not very keen on jumping into buying this business because I want to see how this story kind of unfolds and what happens as a result of this share swap deal, and specifically, how does management respond to whatever happens. For me, it is very important to have management with integrity, and that is why I see more value in being invested in a company like, say, Pershing Square Holdings, since there's a lot more shareholder alignment. Everyone already knows about this Naspers Prosus discount, and it's persisted over the last 10 years, despite management's best efforts to reduce that discount to NAV. I do not believe that the markets are efficient, but in this particular case, the discount to NAV actually does seem warranted. Let me know your thoughts about this share swap deal if you're already familiar with the whole Naspers Prosus situation. I personally am still learning about this entire situation, so any new insight is good to gain. If you are a shareholder in either company, then do let me know what your vision about the company, the outlook of the business is over the next, say, 3 to 5 years. Will the CEO get fired? Will the discount to NAV ever reduce? I don't know the answer to these questions, but it is an interesting story to watch from the sidelines. So those are some of my thoughts about Naspers and Prosus. I hope that you like this video, and thank you for watching.